In the fast-paced and unpredictable world of cryptocurrency, few things are as alluring and dangerous at the same time as newly launched coins, and WAL Coin is a prime example of how market hype, human psychology, and technical deception can combine to create massive opportunities for scammers while putting unsuspecting investors at risk. WAL Coin, a relatively new digital token, has recently captured the attention of traders due to its rapid social media growth, apparent backing from large holders, and sudden surges in price, leading many retail investors to wonder whether it is on the verge of a meteoric rise or a catastrophic collapse. The truth, however, is far more complex and involves a layered manipulation strategy that draws heavily from the classic pump and dump playbook while adding a modern twist that leverages wallets, insider narratives, and social engineering. At its core, the scheme relies on creating the illusion of massive investor interest, usually through a combination of orchestrated wallet activity, hype-driven promotions, and selective information release. Scammers typically control multiple wallets, often referred to as shell wallets, where they seed the token supply in a way that allows them to manipulate the market at will. These wallets are carefully monitored and moved in small increments to simulate organic trading activity, creating the impression of momentum and liquidity where little truly exists. To further reinforce the illusion, screenshots of wallet balances or blockchain explorer links are shared across social media and private channels claiming to show whales or insiders acquiring large amounts of WAL coin. This plays directly into the psychology of retail investors who are naturally drawn to following perceived market leaders, believing that if a whale is buying, the coin must be a solid investment opportunity. The manipulation begins quietly, often weeks before the visible market activity. Orchestrators quietly accumulate WAL coin in multiple shell wallets, positioning themselves to maximize impact when the pump begins. They carefully monitor the timing and size of wallet movements, sometimes transferring small amounts between controlled wallets to create transaction histories that appear legitimate. These internal transfers, while meaningless in terms of external market impact, serve as proof of real activity for potential investors who are monitoring the blockchain for signs of growth. Simultaneously, the promoters of WAL coin cultivate a narrative that suggests credibility and insider knowledge. They may claim that certain wallets belong to influential investors or that these wallets have moved substantial amounts of coin in preparation for a major market event. This narrative is shared widely through Telegram groups, Discord channels, and other social media platforms, often amplified by bots or paid micro-influencers to reach a wider audience. By strategically leaking information about wallet activity and pairing it with stories of impending exchange listings, technological updates, or partnerships, the orchestrators create an irresistible sense of urgency and excitement. Investors begin to feel they must act quickly or risk missing out on a lucrative opportunity, a psychological trigger known as FOMO, which is exploited repeatedly throughout the lifecycle of WAL coin's pump. As anticipation builds, the orchestrators increase the apparent market activity by engaging in wash trading, buying and selling tokens between controlled wallets to artificially inflate volume. This creates the illusion of liquidity and genuine investor interest, making it easier to draw in unsuspecting retail participants. The promoters continue to release selective wallet information, emphasizing movements that suggest accumulation by insiders while ignoring transactions that might indicate risk or instability. Countdown timers, alerts, and coordinated social media posts encourage investors to buy immediately, reinforcing the belief that the coin is about to experience an exponential rise in value. For many, seeing what appears to be a whale wallet moving a significant number of tokens is sufficient to validate the decision to invest, especially when combined with the social pressure of community hype and the fear of missing out on potential profits. This carefully orchestrated build-up ensures that when the actual pump occurs, there is already a significant pool of eager buyers ready to push the price higher. When the pump commences, retail investors rush in to buy WAL coin, driving the price upward while orchestrators begin to strategically offload small portions of their holdings. These early sales are subtle enough not to disrupt the upward momentum, allowing the orchestrators to maximize profit while maintaining the perception of ongoing growth. As the price peaks, panic gradually sets in among late entrants who notice volatility and sudden spikes in sell orders. The orchestrators then accelerate the dump phase, selling larger portions from the primary wallets and causing the price to collapse rapidly. Many late investors, caught in the frenzy and unable to sell quickly due to low liquidity, suffer significant losses. Once the orchestrators have liquidated their positions, they typically vanish from public channels, shut down promotion platforms, or provide vague explanations, blaming market forces or normal corrections. This disappearance is deliberate, ensuring that those left holding WAL coin have little recourse and reinforcing the efficiency of the scam. Dissecting a WAL coin pump and dump scheme requires vigilance and skepticism. Red flags include sudden, unexplained wallet activity, disproportionate spikes in volume without corresponding news or development, multiple internal wallet transfers, and anonymous or unverifiable team members. Investors should scrutinize token distribution, monitor liquidity levels, and verify wallet addresses through blockchain explorers. Even minor inconsistencies, such as unusually timed transactions or repeated movement of tokens among the same set of wallets, can indicate manipulation. Tools that monitor whale activity, wallet balances, and market anomalies provide critical insights and early warnings for potential scams. Beyond technical vigilance, disciplined investment strategies are essential. Avoiding assets that rely solely on hype, limiting exposure to speculative tokens, establishing exit strategies in advance, and maintaining emotional discipline can mitigate the risk of falling victim to WAL Coin or similar schemes. Community education and reporting suspicious activity further help protect potential investors and reduce the effectiveness of these manipulative operations. Ultimately, WAL Coin exemplifies how modern cryptocurrency scams have evolved, blending technical blockchain mechanics with psychological manipulation to exploit retail investors. By combining fake wallet activity, coordinated hype, and selective information release, orchestrators craft a narrative that appears credible and enticing. Many investors, lured by the illusion of insider activity and the promise of rapid gains, enter the market at peak prices, only to suffer losses when the orchestrators execute their dump. Understanding the lifecycle, techniques, and warning signs of WAL coin manipulation is crucial for anyone participating in cryptocurrency markets. Education, critical thinking, and cautious trading practices are essential defenses. WAL coin serves as a stark reminder that in the crypto world, appearances can be deceiving, and even apparent whale activity or insider accumulation may be part of an elaborate, calculated scam designed to exploit human psychology and generate profit for a select few at the expense of the many. By remaining vigilant, skeptical, and informed, investors can navigate these treacherous waters more safely, protecting their capital and making more rational, evidence-based investment decisions.